Grazie per questo quadro assolutamente dettagliato. Ci sono motivi di speranza allora. La vostra analisi vorrei confrontarla con quella degli investitori stranieri, quindi li invito sul palco per Sfide in un mercato in trasformazione, le aspettative del capitale straniero, e chiedo a Olaf Schmidt di coordinare i lavori. Se volete ci sono le cuffiette per le traduzioni simultanee, non so se qualcuno ne avesse bisogno. Ne approfitto per porgere i saluti di Aldo Mazzocco, il presidente di Asso Immobiliare, che in questo momento si trova ad Amsterdam e saluta i presenti. Un mio saluto personale ad Antonio Intiglietta di Eire, che avevamo invitato come ospite d'onore, per motivi di lavoro non può partecipare, ma da parte nostra c'è sempre una grande riconoscenza nei suoi confronti. Olaf, a te la parola.
Buongiorno a tutti, sono Olaf Schmidt, responsabile del settore real estate di LA Piper su livello internazionale. Prima di iniziare il nostro discorso volevo ringraziare Maurizio Canone per questa iniziativa e magari soprattutto per aver avuto il coraggio di lanciare questa iniziativa. E, non so, io penso che sia meritevole di un applauso, se siete d'accordo. I have to switch in English because our guests not all of them speak Italian, and we agreed that we would keep this discussion in English. The idea was that we provide you with an impression of what the foreign investors in our country think about Italy, about what is going on currently in Italy, and that what we did is we invited 5 of our clients who all of them are either recently active investors here or are definitely determined to become shortly investors in Italy. So the insight should be relatively relevant for our topic. And I would say before we start with the specific questions, I would ask each of you just to present yourself to our audience.
Can you hear me? Yeah. So Riccardo Dallolio, I co-head HIG Capital's real estate activities in Europe. HIG Capital is a private equity and alternative assets investment firm. We have about more than 13 billion euros of equity under management, and in Europe we focus mostly on small to mid-cap value-add transactions.
Good morning, I'm Katherine Rice. I'm with W.P. Carey. W.P. Carey is a real estate investment trust. We started our life about 40 years ago as a fund manager in the United States, primarily with retail investment funds. We have about 130,000 retail investors in our company and in our funds. In 2012, we made the decision to become a REIT. I joined the company in 2013 to help with the strategic switch with investors and others to become a REIT. Today we have about $18 billion of assets under management globally. About 30% of that is in Europe. We have offices in London and Amsterdam. Our primary product is long-term sale-leasebacks. But we also invest in other asset classes, particularly in the United States, including hotels and value-added development.
Let me first turn off my telephone, that's more important here. My name is Michael Ernestus. I run a fund, a SICA fund out of Luxembourg, focusing on private equity investments in the hospitality industry. We're a team of investment bankers and hospitality experts. My partner is the former president of Relais & Chateau. And we focus on hotels that are distressed in the European area, mostly 4 and 5 stars. We have 300 million right now under management. It's our first fund. We're based out of Luxembourg as a SICA fund.
I am Paul Muno, running the German platform of Internos. Internos is a partnership doing investment, asset management and fund management business in real estate. We are running roughly 4 billion assets under management all over Europe. As a regulated business, we are based mainly in London and Frankfurt, but also have branches in the most important European cities. We are roughly 110 employees running this business, which has grown from predominantly manager replacement now to the normal core to core plus value add investments for institutional clients only.
My name is Wolfgang Speckhahn. I'm with Patrizia Immobilien, a listed real estate company out of Germany. I'm heading the strategies and corporate development departments, especially responsible for the European expansion. We are working out of 10 offices in Europe with 800 employees, managing over 15 billion euros of assets, located primarily in Europe. We're focusing on institutional capital, working on behalf of insurance companies, pension schemes in Europe. So focusing on established assets with sustainable income.
Good. Thank you. Before we start with the specific questions, I just wanted to let you know that we had a very nice dinner yesterday evening on this new restaurant of the Triennale, La Terrazza, I think it's called, just to bring us in positive mood. There was a spectacular view over Parco Sempione with this nice Heinz development in the back. So I think more positive than that we cannot be today, or we'll see whether that has transformed into positive opinions that we will hear now. Riccardo, HIG has started quite some time ago doing debt investments here in Italy. I know that you're about to close the first equity investment. That seems to be a pretty diversified approach to this country. What are your plans for Italy, and doesn't that require a big infrastructure here?
Yeah, I mean, we will continue having a pretty flexible approach. We like investing across sectors, across the capital structure. We continue investing in relatively small non-performing loans books on usually off-market situations where we can craft an appropriate solution for the bank and at the same time execute a transaction with good risk-adjusted returns with a good visibility on the cash flows. So we continue to do so. We have other transactions which we have in the pipeline and we plan to execute soon. But again, these are relatively small transactions. At the same time, as you mentioned, we're about to close our first equity deal, specifically in the retail sector. We have a number of deals in the hotel sector, in office, and in healthcare. And we like to keep a pretty broad approach, given our ability to tackle this via hiring people locally. We have an office in Milan, very close to here. We have did a senior hire last year, and we plan to increase the team locally. But at the same time, we will outsource and we work with operating partners. We work with Fare NPLs and with other operating partners, and we plan to use a double approach, increasing organically, locally, and at the same time using operating partners.
I don't know if you're ready. We didn't prepare this, but I read this morning that there is a new joint venture announced.
In HIG, we have a number of businesses. We have, as part of the 13 billion globally, there is a relatively large private equity business, mid-cap, and there is also a credit business. And real estate is on top of that. So in Italy, we have the private equity business, which is pretty big, and as well as the lending business. So yeah, we tackle Italy under a number of angles, not only real estate. We're very committed to it.
Good, thank you, Riccardo. So, Katie, next question to you. You mentioned it before, you are actually known for this big company investing in sale and leaseback transactions, very strong tenant covenants usually. But from our discussions, I understand that you are looking now with a broader picture at, or broader view at investing in Europe, but also in Italy. Maybe it is interesting for our audience to understand which is your target in this broadened perspective.
Yes, well, the sale-leaseback product will continue to be our primary focus. The vast majority of our assets are in the long-term triple net lease with major companies typically. That'll continue to be the major focus, but we do also have in many of our funds, in our fund management business, asset allocations for value-added properties. We invest across all asset classes, so office, retail, industrial, logistics. So we do work, when we work with value-added development, we typically work with local operating partners who have a deep knowledge and understanding of the local dynamics. The one thing you can't get away from, although we have what is global capital, real estate is always a local business, and you have to know what you're doing on the ground. W.P. Carey's been in Europe for about 15 years. Our investment team's located in London, but we have 40 people in Amsterdam that run our asset management process, our tax, compliance, our legal. We've invested in over, I think, 13 countries in Europe, so it's a complex operation because despite the Eurozone, you're not that organized from a tax and legal perspective country to country. So it's very important for us to understand that. One of the transactions we were talking about last night, we've invested most recently in a retail transaction in Norway with a local operating partner, which has development and expansion capabilities there. So we will continue to look for at least a small portion of our funds for these types of opportunities.
And both the sale and leaseback business and the more diversified investment would be possible also here in Italy, otherwise you wouldn't be sitting here.
Yes, absolutely. We've looked at a number of transactions in Italy. One of the largest ones was several years ago that we completed. It was in, I think, 2011, a transaction for the Metro cash and carry stores. We invested in about 20 stores. It's about $400 million. It was a 20-year triple net lease with the German credit Metro. Cash and carry stores throughout Italy, primarily in the north. That transaction is with one of our partners, which is BNP, manages that for us on a day-to-day basis. Although with respect to sale-leasebacks, one of the things that's interesting from a global perspective is they're not a management-intensive type of asset from a real estate perspective. So it's a little bit easier for us to be global, and it's a little bit easier for us to invest across the asset classes because of those long-term net leases where the tenant is really responsible for maintenance, capex, and operating the properties.
Okay, so let's pass on to Michael. You mentioned that you're coming from an angle of hotel and distressed. I think we all believe that the Italian market is definitely a market for hotel business, given the destination we are for tourists, but also for business. And then, unfortunately, we have also the distressed component here. How would you classify the Italian market in the overall context with that combination?
Well, from our point of view, we are looking less at exploiting the distressed situation because of the peculiar situation of executing distressed situations here. We're looking more at improving hospitality assets than just exploiting financial distress. In other countries, we would go in, we would buy loans, we would convert these loans into equity. We would exert a certain pressure on the owners. In Italy, that is much harder for us because of the legal complications we have here. And therefore, we basically go and try to work out situations where an owner needs expansion capital, or a family wants to exit, or we have other means to improve the hospitality asset themselves and less exploit the financial situation. It is not the optimal structure. We focus on basically what we call gateway cities. That means they have to have both a business element and a tourism element. And that, of course, in Italy is Milano, Roma, to a certain extent Florence and Venice, but that's where we restrict ourselves. We don't go into any other markets than these.
And I understand your business model in the sense that you are not looking at taking over the operations. You are an investor. And
no. We supervise operations. Our hospitality team feels that it can give advice and structure and knowledge and improvement, but we do not get involved. We're not an operating company, we're an owner that exerts influence on management.
Thank you. Paul, coming to you. Internos has made its entry into Italy, as far as I know, 2 years ago by buying the platform of the Commerz Real special funds business. Now, you said it at the beginning, you personally are responsible for the German platform, but your company is obviously a European and a pan-European investor. The investments which you took over when you bought that platform were predominantly logistic, if I remember correctly. Can you tell us what your outlook is? What shall become out of Internos in Italy?
Internos is running the entire sectors of real estate, from office to healthcare, logistic, and hotels also. We have some similarities. So we are open for all kinds of investments. Predominantly we have logistics purchased here in Italy and some office space, but we are open for all asset classes which are available. It depends a little bit on the taste of investors. They are at the moment, I guess, from the core perspective, quite reluctant to invest, but from an opportunity-driven, development-driven point of view, there's much more demand at the moment. So we are open for the entire risk spectrum to step into Italy.
And you mentioned that you also have specific ideas on how you could imagine to strengthen your presence here in the market?
We are in London and in Germany in AFM, which means we are regulated, and the normal institutional investor likes these kind of regulated vehicles. So the SGR in Italy is this kind of choice, a lot of institutional investor like, and we are looking into this market. From a foreign point of view, it looks quite opaque, this market, and it's difficult to get the right access to purchase some of these SGRs. And if in the meantime we get the mandate to do any institutional business in Italy, then we would also do this kind of Euro passport and take this from Germany with the approval of BaFin, and then to step into the Italian market.
So a sort of private question. Paul speaks Italian because he's married to an Italian woman. No plans for you to transfer here to Milan, or?
I used to work here for a couple of years. So now as Milan hosting the expo, it changed a lot in a positive way. So I could think about it. Okay, so Wolfgang, I think very few of our guests know that Patrizia is probably one of the fastest growing asset managers on a European level. I've been to your headquarters in Augsburg. Not many of you will have been in Augsburg. It's not the center of the world, but I think you are still known as the specialist in residential investments or management. But the story has become quite different. Can you tell us a little bit about the vision of Patrizia for this market, for the European market, but also for the Italian market?
Sure. I think, meanwhile, we're not only known for our residential competence anymore, but it's still in the mindset and is the understanding of the markets. We have transformed the company already starting this decade into a company where we have 50-50 residential and commercial assets under management. So we're not anymore focused predominantly on residential. Having said that, especially in the last 3 years, we have very much increased our commercial competence with specific teams we have insourced, not only in Germany, but on our European platforms as well. From a strategic perspective, we are today looking in all asset classes and risk profiles, so we're not very much different to my colleagues on the panel here. However, there's one difference which I do see is that we take the real estate business being local and the understanding of it more ahead, so to say. We're not only having offices in different European cities, rather we look into countries from a more operational point of view, from a business point of view, and analyze each country whether the country is providing a business environment which provides us with the opportunity to do business on long term in a country. So we're not going into a country, i.e. Italy, and investing in one office building, managing this from Augsburg, and trying to have that with a local partner managed. We understand local business in a way that we need to be on ground. We need to work with local native people on ground, and to provide the investors from a local setup with all the services necessary throughout the value chain. And we're not sending any Germans around Europe because they might have a huge competence and knowledge, but not locally other than in Germany.
A good example could be what you've achieved in the UK.
I mean, good examples are each of our countries, which we have established during the last years. We analyze, as I said, the markets firstly in terms of the macroeconomic and real estate market situation, and then trying to find local people to set up our platforms, either organically that we find competent people in the market, or through active M&A strategies. That was the way we did it in UK. But recently, in April, we opened our platform in Spain and found a small team which took up the business. And immediately thereafter, we tried to establish the business as we did in the Dutch market, where we opened our platform last May. And months later, we were able to do the largest residential transaction in the market.
Thank you. Let's go back to Riccardo. Can you pass the micro? Riccardo asked me not to mention the name of his former employer. Everybody knows, I believe. So I say you worked for an institutional investor before you joined HIG. What I find interesting, and hopefully the audience as well, is to understand there must be a big difference between what you did before and what you're doing now. And I think there's also a difference between how you now can look at this country and how you had to look at this country before. You did a lot of deals before, but I think now with this private equity, more opportunistic approach, you might have more opportunities. Is that fair to say?
I think there are opportunities on both sides, right? I mean, the different targets of capital. I mean, the institutional, more core plus capital has the patience, the skills, the ability to own and build core, which is key for a city. You can shape entire areas of city with that kind of capital, which is able to walk through the cycles and really have the patience to do that. Also the locations, the focus, they're mostly central, core, and there's a different kind of prospect in terms of duration of the investment. On the private equity side, where I see the opportunity is on relatively illiquid situations. I mean, private equity is pretty good in managing illiquid situations. The type of capital we have is locked in for a period of time. We have time to, to think about the asset, create value, unlock value. This could come from a capital event. Certain situation, there is an issue with the borrower and the equity owner. Within the equity ownerships, there could be problems to sort it out. In other situations, more simply, we need to revamp a project, and so we invest the relevant capital in different structures that allow us to crystallize value over the short to medium term. I think there is also this fact that we focus on short to medium term. And in general, what we tend to see is that opportunities tend to be more granular and more in more secondary locations, right? So we tend to create markets in those situations because we can work with the local partners, with our team, into these projects. Institutional investors, and that like many generalizations have a lot of limits, are better suited for large and medium to long-term projects, right? And Milan is a great example of it because I haven't been here for many years, and I have to admit it's changed a lot in a very positive way. What has been done in different parts of Milan are outstanding by absolutely any comparison. You know, in London we have King's Cross, you have Porta Nuova. I mean, there are similar projects in terms of capacity to go through a crisis and build something extremely valuable.
Thank you. Riccardo is always very clear on saying that he probably knows less about Italy than many of us, because even though being Italian, he hasn't been here for 10 years now.
I would say close to 20, yeah.
Close to 20 years, okay. Which is why Gabriele is here and makes sure you have the local knowledge. Katie, you have to forgive me for a generic question. You are the only US person on this panel, and I think we all are interested in understanding what US investors think about our current market, or the Italian real estate market. Of course, we know about the Blackstones, the Starwoods, the Cerberus. This capital is here, and I think we all know what they are currently doing. But I imagine there's plenty of other US investors, not as visible as the big companies who are looking at our market. Can you try to analyze a little bit from what you know the position of the US capital?
Sure. I think US capital is not that different from other global capital sources. We're all looking for appropriate risk-adjusted returns for the type of capital that we're investing, whether it's private equity type capital that has a higher return criteria and maybe a shorter lifespan, or long-term investing in core assets, which has a lower risk-adjusted return and a longer investment horizon. I think with respect to global capital flows right now, clearly Europe is well behind the United States and has different economic issues, as we heard from the speakers earlier this morning. In the US, we're actually starting to think about raising interest rates. Europe is just beginning to start its QE program. There will be different drivers of the economy in the US versus Europe, but what investors are seeing here today is, and what we're seeing is, we can invest in Europe, and I'm using Europe, which is not a good thing because it's not a generic place. Just like you cannot say in the United States everything is the same. We have Detroit, and we have the Silicon Valley. You have Greece, you have Germany. So there are lots of different ways to look at Europe, but generally speaking, we can make investments in Europe that have a cap rate that is 50 to 150 basis points higher than we can make in the US, and yet we can issue debt. We're an investment grade bond issuer. I can issue debt in Europe. We just did an 8-year deal in January at 2% coupon, and in the United States I'm issuing at a 4+% coupon. So our asset spreads are higher here and our debt spreads are lower, which you don't have to do, you guys all do math well. That's a good environment for investing. The United States has become fairly competitive with respect to real estate. Cap rates have been driven, well into the 6 and 5% range. And debt has become increasingly available. A friend of mine is a developer in San Francisco and Honolulu. He was doing a redevelopment, office building redevelopment in Honolulu. It's a value-added project with a lot of complexity. He went out for a debt quote and he got 32 debt bids. Banks, funds, you name it. So there's a lot of competition in the United States, which has driven yields to points where many of us feel they might not be as sustainable, particularly as we see a rising interest rate environment. And typically, as you know, cap rates take a while to adjust to a rising interest rate environment. So we think Europe is a very exciting place to be. About 75% of all of our investment dollars in the last 12 months have been in Europe. Italy is, for better or worse, behind the bulk of Europe in terms of its recovery. So that's why many institutional investors are targeting Italy at this time.
Thank you, Katie. Michael, you've done your last investment in Spain, and I know you're looking and are actually in negotiations for something here in Italy. What was your experience when you came to Italy? Just let me know, like, the three things that surprised you most, comparing maybe Spain with Italy, but in general, when you came and started investing here or looking at investments.
Well, the first thing that surprised me was the nature of the hospitality market, that it is much more family-oriented, much more polypolistic and fragmented, and the type of assets that we are looking for are harder to find. We're looking usually for 150 plus rooms, and as I said, in the major cities. What surprised me even more was the reluctance of the banks to acknowledge their problems and get rid of their NPLs. There was a kind of continuing pretending that the crisis will go over. I think that changes. I think the banks get now more aggressive with because they're under scrutiny by the EU, get more aggressive with their loan portfolios. But what surprised me the most is the legal environment to enforce on foreclose on properties that are in trouble. And for us, the time horizons that you seem to have in Italy are so long that it basically precludes us for getting into the NPL business and buying a mortgage and foreclosing on it. I cannot imagine to be in courts for 6 to 7 or 8 years. It's out of the question, and if I have a suggestion, you guys have to do something about that. But the difference to Spain, for example, is that the Spanish had similar structures, and I think they addressed it much more effectively than Italy has so far. So what forces us to do is to focus more on family-type hotel operations and more on the improvement of the actual management and operations than on the improvement of just the financial structure. And in particular, the law provides a balance between the interests of the debtor and the creditor. But if there is no high pressure on the debtor, then he's less willing to entertain ideas how to restructure and to adjust his financial situation. So that with that option and that leverage out, it's harder to do business.
Okay, thank you. Paul, you mentioned that you're looking at, one of the options would be to buy into an SGR platform to increase your business. I'm sure you did a little bit of research on the topic. How is the market of the SGRs seen from abroad?
As mentioned before, it's very opaque, It's a business not driven by any pressure, and it looks like that foreign investors will have difficulties on both sides. On the regulatory side, so to get approval from Banca d'Italia, and then even to convince the investors in these kind of SGRs to sell off their shares. So this is a difficulty we see. And most of the SGRs which are on the market or were on the market had so huge difficulties that from a look-through perspective, looking into the balance sheet, it may be of high risk to purchase such a vehicle. So for that reason, the European passport may be a solution, but it's also difficult to convince Italian institutional investors to step in such a vehicle because all the legal DD which is necessary then to understand it takes them a lot of time to do.
So your idea could be like Wolfgang mentioned before, to not buy an existing SGR, but take a team on board, buying the team out, if you can, out of one of those structures.
We started with the first professional which joined Internos last year, and he helps us then to grow the business on the ground, starting with asset management to get a name in the business, make the brand of Internos much more known, and then taking over more people in the next couple of months. So that we, as a platform based on asset management, then start also doing what we have done in other jurisdictions, to start with manager replacements and then offering own funds to institutional investors here in Italy.
Okay. Good. Last question before we come to the conclusion to Wolfgang. Given that you are on this mission to expand your platform on a European level, how come that Italy seems to be the last one on your list? Any particular reason that you didn't show up before?
Yeah, there are reasons. It was by will, not necessarily to be the last country. We've set our strategy in 2012. Everybody looking on Italy in 2012 wouldn't have had Italy on its scorecard. So for us it was clear Italy is not in its shape right now in 2012, maybe later, so we monitored and we had 5 countries to work on. So now having completed the 4 other countries, one is left, which is Italy. So we're not sure when to enter the Italian market. I think we are thinking about the very same issues Paul is thinking about. But having the first analysis done, we think the market, for us at least, having become a European manager, meanwhile, it might be very much interesting for us to provide Italian investors with different ways of investing cross-border, because we see a lot of capital wanting to invest, not necessarily in Italy, because they are over-allocated in Italy. They like to diversify their portfolios. Looking in the European landscape, you're not going to find very much real European managers. And with a European manager, I do not mean the ones being in one location providing, sorry Paul, just EU passport vehicles and management. We provide in all the countries where we are active an AIFM. So we provide actually local vehicles and local managers. So we prevent investors from doing this due diligence type of activity. So an Italian investor who wants to invest cross-border, we think needs to do that from an Italian platform, and we provide the platform and deal with all the difficulties to the asset. And we've shown that we are able to provide the products which are necessary to do so. And I think that's a very good match, and that's a story where synergies can be taken from.
Okay, good. So let's start with the last question. Same question to everybody. 25 million to invest in Italy, and it's just your choice.
Well, first of all, I would like to say that we are very committed to Italy, so we like the story. We've invested a lot in it. We have now 4 very senior professionals who focus on it. That worked for the last 20 years in the sector, so we are very committed. I think one of the things that, and I answered the question at the end, that we need to really focus on is that while we've seen some growth in the economist comments, you know, this growth is also linked to the low euro, the low oil prices, and quantitative easing, right? And these factors are outside the control of Italy. So we need to monitor how these things evolve as we do our investment scheme. What we should do, 25 million is what we do now. I mean, I would still focus on smaller, probably NPL books and smaller retail deals, if you ask me, in good catchment areas where, you know, there are some capital events or some capex that one can, you know, very simply put in place to extend the leases and make the asset more institutional. So I think what we do with 25 million is pretty much just about right.
Okay, Katie, where would you put the money?
Well, I think we would go with one of our core strengths, which is the long-term sale leasebacks, particularly now with our ability to fund at very inexpensive debt rates. These types of assets with long-term cash flows can really generate the types of risk-adjusted returns that our investors and our public company investors are looking for. So good credit, long-term, and when I say long-term, I know in Italy there are, you know, you've got your 7 and 9, but we tend to do 15 to 20-year leases with good credits, and we're fairly agnostic with respect to property types.
Michael.
Well, as you know, we are currently in a little bit bigger ticket than 25 million, and
make it 50.
Well, right. The interesting thing is that we apply this money in a situation where there is an existing outside investor into Italy, and he has substantial pressure in his home country, and we try to help him in his home country by raising cash here, by divesting one of the project that he has here, and therefore we get around the problem that I outlined before, that we have to deal with families that are not ready to acknowledge their problems, or that we cannot otherwise exploit in a financial distress situation. Actually, this particular company, which, as I said, is not from Italy, has to get rid of assets. 2 very valuable assets we feel are here. We're helping them, and that will relieve pressure from the banks in their home country. Probably a structure that is not that easy to repeat because you don't find these situations as often. We're looking in Rome right now at a similar situation where there's an Italian company that is under pressure by the banks to raise some cash, and the interesting thing though is that they want to get rid of some non-Italian assets. So we probably will use that Italian situation to buy properties in France in that particular case.
Okay. Paul, where does the money go?
Internos invested in the last 3 years roughly $500 million also in hotels, and I would go for a hotel in Rome or mixed-use property in the center of Milan with shops, offices and residential in the last floors, and a small slice I would invest in a summer residence in Umbria.
Okay. Good, that was a clear answer. Wolfgang, you're the last to conclude.
Well, I think I would be reluctant to go into Italy in the next 6 months. Still, I think at least from a core investor perspective, the market is either too expensive or products are not available in locations they are looking for. So I think I would wait a little bit. But if I were to select a sector, I would clearly choose for the residential sector in Italy. I think there will be very much comparables to the Spanish market, and the Spanish market in this respect has become very, very interesting and will become more interesting in the future. And I do see a lot of comparables in between Spain and Italy, even though the environment and the structural things have not been done yet, and maybe will not be done in future. But I think in the residential sector there will be a change in the market going forward.
Okay, thank you, Wolfgang. So this is the end of our panel. I would like to say thank you to all our guests. All of them flew in for this event, and I think that is worthwhile an applause, and I hope you enjoyed the panel.